Hey everyone, welcome back to my real estate channel. Today, we're diving into a topic that many homeowners contemplate at some point in their lives, converting their primary residence into a rental property. Whether you're considering a move, looking for additional income, or just exploring your options, we've got you covered. My name is Adrian Chu. I am the president and designated broker of Specialty Real Estate Group and Specialty Home Loans. Based in Seattle, Washington, I am a seasoned investor, builder, and proactive trusted advisor to sellers and buyers alike. I do not provide tax, legal, or accounting advice. This material has been prepared for informational purposes only and is not intended to provide and should not be relied on for tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Let's dive in with the benefits. First off, there is passive income. One of the most obvious benefits is the potential for passive income. Rent from your property can help cover mortgage payments, property taxes, and even leave you with some extra cash in your pocket. This is especially the case if you purchased the home prior to the interest rate hikes or refinanced your mortgage when rates were low. Next up are tax advantages. There are also tax benefits to turning your home into a rental. You may be eligible for deductions on mortgage interest, property taxes, insurance, and even depreciation. Furthermore, there is the potential for appreciation. Over time, your property could appreciate in value, providing you with a significant return on investment when you decide to sell. You also get flexibility and control. As the landlord, you maintain control over your property. If you plan to return in the future, renting allows you to keep your options open while generating income in the meantime. And last but not least, diversification of investment portfolio. If you have been investing in things other than real estate, renting out your property can be a form of diversification, spreading your investments across different asset classes. Now, onto the disadvantages. There is a potential loss of tax benefit. One significant drawback of turning your primary residence into a rental property is the potential loss of the capital gains tax-free benefit under Internal Revenue Code Section 121, which provides for an exemption for up to $250,000 in capital gains if you are single, or up to $500,000 if you are married. You're eligible for the exclusion if you have owned and used your home as your main home for a period at least 2 years out of the 5 years prior to its date of sale. Don't fret though, there's also a way to get the best of both worlds. I will go over it towards the end of this video. There are also property management challenges. While rental income is attractive, managing tenants and property maintenance can be time-consuming and challenging. Are you ready for the responsibilities of a landlord? Furthermore, there are market fluctuations. Like any other investment, the real estate market is unpredictable. Economic downturns or local market fluctuations can affect the rental demand and property value. Additionally, wear and tear. Renting often results in more wear and tear on your property. You might need to invest in repairs and maintenance more frequently than when it was your primary residence. And if your end goal is to sell the home, you may need to factor in the cost of updates prior to selling it. And finally, changing market conditions. Economic conditions, interest rates, and housing market trends can impact the profitability of your rental property. It's essential to stay informed and adapt your strategy accordingly. But the ultimate question is, do you see yourself being a landlord? Is that something you want in life? That will guide you in your decision-making process. Finally, if you are unsure about whether to sell now or later, you can consider renting out the home for a couple years before selling. As long as you have lived in the home for 2 out of the most recent 5 years before selling, you should qualify for the Section 121 tax exemption mentioned earlier. Consult with your tax professional before you make a decision, though. So, there you have it, the pros and cons of converting your primary residence into a rental property. It's crucial to carefully weigh these factors and consider your personal circumstances before making such a decision. If you have more questions or need further advice, feel free to drop them in the comment section below. Don't forget to like this video, subscribe to my channel, and hit that notification bell so you never miss an update. Until next time, I'm Adrian Chu, your guide to Seattle's real estate.